Hello and welcome to the Twin Fusion Show. My name is Christy,
Hi, I'm Kathy.
and today we're doing a show about the coming economic crash. We feel like it's imminent. It's going to happen sometime this year.
Yeah.
It's been imminent since 2008, but they've been holding it off. But now we think that it's pretty much imminent. So we're just going to talk a little bit about that so we can help people understand what they can do to prepare for
And
it.
you kind of navigate through
Yeah,
if we do have a crash.
yeah, we have friends that don't watch Patriot sites and they just listen to the MSM, and we want them to know that there is one. Guys like Jamie Dimon always say, "Oh, there's no crash coming. Oh, we're fine," because they have piles of assets to buy up smaller banks. So if they're fine, but we're not fine, and our economy's not fine. So anyway, so
Cooler heads will prevail. Everything's fine,
yeah, but it's not right now. So pretty much at the end of it's fine.
Yeah.
So we're just going to talk about it for a little bit. So here we go.
Okay, and what this is called is a black swan event. That's kind of what they call an event that's
Financially.
yeah, it's a financial black swan event. And a black swan event is a high impact event that's difficult to predict under normal circumstances, but in retrospect appears to have inevitable. So in this video, we aim to bring light to the inevitable that can be predicted in some scope or manner so that you'll be able to prepare for such an event. And
Yeah.
we feel like it's really impending.
Yeah.
I mean, it's really pretty soon. If not this summer, maybe around election time, because it's ramping up.
Yeah.
So we have concluded from our research and observation of current market indicators, including runaway inflation, which everybody's feeling, the end of the petrodollar agreement, which ended a week ago, and our government's handling of the current economic policy, that some sort of financial crash is definitely inevitable.
Yes. So the things that contribute to a black swan event that we have isolated are the end of the petrodollar agreement, which happened a couple weeks ago, the volatility and decline of the bond market, and hyperinflation. The first two, some people may not understand kind of the dynamics of it, but hyperinflation everybody can see and feel,
Well, yeah,
and it's part of their
everybody's
lives
feeling
right
that
now.
one.
Okay.
Okay. So with the petrodollar agreement expired, what it really was, petrodollars are not a currency, but US dollars in exchange for crude oil exports. In 1974, the US-Saudi agreement exchanged oil for military support, and the petrodollar agreement ending allows Saudi Arabia and OPEC nations to trade oil in multiple currencies. So we see this as a problem, and we're going to explain why.
Okay.
Okay, so a little bit of history behind the petrodollar. After World War II, the world reserve currency was switched from the British pound to the US dollar in the Bretton Woods Agreement. This is like 1944. The US had a strong economy after the war, and our dollar was pegged to gold. So the European countries, including Britain, which was the original reserve currency, had just been devastated in the war. The U.S. economy was in decline from the Depression, the Great Depression, but then the war machine started, and we started making tanks, and we started making Jeeps, like Ford Motor Company, GM, Chrysler were all like making stuff for the war. We were shipping it over, and the other countries were, the Allied countries were buying them from us, and this really increased our GDP and really brought us out of the Great Depression. So we were pretty much the strongest man standing after World War II. So they pegged our dollar to gold, so it was backed by something, and it was the world reserve currency, which gave it power and gave it a lot of authority.
Yeah.
So, but in 1971, unfortunately, President Richard Nixon ended the dollar's convertibility to gold, which means they took it off the gold standard. Wasn't pegged to anything. So this led to floating exchange rates and currency volatility, which we have seen since then. And they did this, the large banks, the large investment banks and the huge banks did this so that they were able to just do whatever they wanted with our money. Because if it's pegged to gold, you can only, print as much as gold that is in reserves. But if they don't have gold in reserves and it's not pegged to gold, then it's just basically funny money, and it can be they can do whatever they want with it and jack it around. And they've been doing that since 1971.
Yeah.
So with the petrodollar in 72, the OPEC, the Organization of Petroleum Export Countries, imposed an oil embargo on the U.S. due to U.S. support for Israel in the Yom Kippur War then. And this caused, because of the shortage of oil, it caused the oil prices to skyrocket.
Right.
And we remember
being little kids.
Yeah.
Sitting in the back of the station wagon.
And the gas lines.
And gas lines for an hour sometimes.
Trying to get gas.
Yeah.
Yeah, it was terrible. So in 74, the US struck a deal with Saudi Arabia and other OPEC nations to kind of remedy the situation. Hence, the petrodollar system was born. And the agreement ended a few days ago, June 9th, 2024. So this stopped the dollar's peg to oil and kind of
so now it's really backed by nothing.
Backed by nothing, except for a little bit of our GDP, our gross domestic product, because we do have a strong gross domestic product right now. So some of that gives our dollar value, but on the world market,
yeah. Okay.
So what the end of the petrodollar means. So since 74, you could only use oil by using the US dollar. So this ensured the US dollar global dominance in trade and value over other world currencies, and kept us kind of as the world reserve currency, even we were taken off the gold standard in 71. So the shift to using other currencies now may potentially weaken the US dollar global dominance, which we're seeing, thus devaluing our currency. And a decline in global demand for dollars could lead to higher inflation, interest rates, weaker bond market in the US, etc. And this will reflect a significant change in the global financial dynamics. And Chrissy's going to talk about the bond market with these and inflation.
Okay. What is a treasury bond? FDR treasury bonds are instruments that of debt, and they're instruments that the government uses to get people to buy, other central banks or Americans to buy the debt of the government, so that gives them money to operate. So FDR declared bankruptcy for the Corporation of the United States in 1933 during the Great Depression. So in 1935, he figured out a way to conscript Americans to buy government debt and other central banks. In the process, it created money for the government to use. And they did this by issuing what are called treasury bonds.
Mm-hmm.
And when bonds mature, in theory, I mean, Kathy's bought bonds for her kids, our parents bought bonds for us when we were kids.
Yeah.
And then when they mature, you cash them out. You get the actual principal and interest on those bonds.
Yeah, 20 years later or whenever.
20 years later, whenever they mature. And that's the same for central governments that buy our bonds. So, but right now we can't even pay the interest on the bonds and that are held by other nations, and let alone the principal.
Mm-hmm.
So the nations are getting pretty pissed off at us about that.
Mm-hmm. And they're dumping
yeah, right. So we're trillions of dollars in default paying on the matured treasury bonds held by foreign central banks. These banks don't want to buy our debt anymore, and they're dumping the unpaid bonds back onto the bond market, which floods our economy with all those US dollars that that came from that. So the government, so the Fed's not only printing money, but we're actually getting dollars in circulation again from the bonds being dumped back onto our market. So it's creating huge surpluses in our dollar, which is creating the inflation that we have.
That's not
so you know, so you ask, how does the federal government get the money now that they're not getting money from these treasury bonds? They don't get it from the income taxes, because those go to this Vatican Bank and the City of London,
which isn't well known.
Yeah, for paying off old war funds. I think even Civil War funds were still paying off, something like that. So what options are left for the government to get money for themselves? They just print it out of nowhere and out of nothing, and that makes the value, the interest, and then they raise the interest rates to keep the dollar strong, and then to keep the values up. But they have to raise interest rates to keep that dollar value up. So we'll just see what raising interest rates has done on the markets in this little Ponzi scheme that they're running. So what is the consequences of printing money and raising interest rates? Okay, so since 2008 and the bailout of the banks, the Fed's been printing money to oblivion, and they call it quantitative easing. So what they did with quantitative easing would they print a lot of money and sort of try to boost the market, boost the economy a little bit. Then they pull back a little bit. Then they wait for a period of time, and then do another quantitative, print a bunch of money, flood into the market to kind of keep the market rolling. And that was in, you know, and then they did that just in schedules. But now they're printing money without they're just quantitative continually. They're not even, you know, they don't have schedules. They're not just doing it a little bit for the market. They're just, you know, doing it. That's why we've had such bad inflation since COVID.
Yeah,
That is the main reason. So as the money supply increases, the value of the money decreases, as we all know. And when the value of money decreases, the Fed raises interest rates to increase the money's value. The Fed is solely responsible for inflation, but tries to blame the consumer for it. Okay, we'll talk about that in the next slide. Go ahead.
Okay, so the Fed's reasoning, and it's always parroted by the mainstream media, they say that more jobs and higher wages lead to increased spending, which leads to a supply shortage, which then increases the price of goods and services. Although that's true, if there's, a shortage in supply, the prices are going to rise. This is only about maybe 0.2% of the cause of inflation. And we don't know exactly the percent, but it's a very small percentage.
But if you hear it from the Fed and from the MSN that pairs the Fed, they say
It's-
that's the only reason. That's
Yeah.
the main reason.
They've got to lower wages for, it's such a small, it's bullshit. And I heard them say just a few weeks ago, we got to lower wages to get the, keep the supply chain. Yeah, it's like not even 2%. And so the real cause, is overprinting a fiat currency that has no backing. And now it doesn't have any, it's not pegged to anything now that it's not pegged to oil. And so because our money is no longer backed by gold, and since 71 oil,
or the
our money has some value based on strong GDP. That's why it's considering all factors, other countries still want US dollars, at least for now, though the BRICS alliance would have you believe otherwise.
Yeah.
And what the BRICS alliance is a group of nations that are trading in each other's currency instead of using the US dollar, which was the reserve currency, and people only traded in the US dollar.
Well, and the reasons that BRICS came about is that because we are the reserve currency, we put a lot of things on other countries.
We've been bullies.
We've been bullies.
Yeah.
And with Russia, we have made it so that they can't even trade at all. We put so many trade embargoes on them and stuff like that with our dollar that they're just like they don't know what else to do.
Yeah.
So they have to get out from under our dollar.
And the BRICS is it's Brazil, Russia, India, China, and South Africa. But now there's maybe 90. I think they said 90 nations that have.
Yeah.
But
the thing is, bullying them.
It's bullying. But the thing is, they are trading in each other's currency, but they still are pegged to our dollar. Yeah. So should something happen to our dollar, the whole world's going to go down.
Well, that's what happened with Japan. Was a couple months ago. They tried dumping our dollar. They've been dumping treasuries. They've been dumping treasuries, but it's really backlashed on them because their currency is pegged to our dollar. And so I'm not sure why they were doing that. Or the yen's not worth very much because if it is pegged to our dollar, it's going to decrease their currency. Yeah. Even though getting off the dollar, it should increase their currency, but because of the tie, it caused their.
So once we go, when the US dollar goes down, so goes the whole world.
Yeah,
unfortunately.
Yeah. So there's going to be a global adjustment.
Yeah, there'll be a global adjustment, but it'll start here.
Okay, Kathy and I are in the real estate business, and so I just want to talk a little bit about the effects of inflation on real estate. We live in Orange County, California. It's right between LA and San Diego. The values of real estate just keep going up. And because of that, with the interest rates rising, there are barely any regular people that can buy homes. The only people buying homes in our market are people that have cash.
Chinese nationals, Koreans, people that come in with cash. Yeah. Or people that can sell their house and get a lot for it and then use that as a down payment.
But that's a regular Joe Schmo, even if they have a really good income.
Yeah.
Usually
few people with $100,000 still have a hard time qualifying for a conventional loan.
Yeah. In this area.
So
I know that the market prices are going down in other areas, but in this area, they're still really high.
They've gone up 10% in the last 4 months.
Yeah. One house that we just sold, and we were looking at a house we sold in January, and it's gone up 10%.
Yeah.
$100,000 in 4 months.
We sold for $1 million. Now it's 100.
Yeah, million's cheap for a house around here.
Yeah.
I mean, 1.2 is your normal single family home.
3-bedroom, 2-bath.
Yeah. So that was one of the cheap ones. But in the consumer price index, which really is what people look at to figure inflationary, things, real estate comprises 40% of it. That includes construction, that includes resale, that includes rentals,
commercial real estate,
residential real estate, all of it.
But that's
So
40%
yeah,
of the
40%
US
of the
economy.
US economy. It's very, very
And,
important.
and everything surrounding it. Because like with the building, it's like building costs, it's like contractors, electricians,
Yeah.
builders, everybody is involved in that. It's a lot of jobs,
And
a
the
lot of
cost have
different
tripled. I
industries.
know because I do, some flipping too, but the cost of everything is 3 times probably what it was during COVID.
Yeah.
Two to three, most really 3 by now, at least around here. But the building costs, building costs have tripled since COVID and has further affected the real estate market. Most commercial banks hold 50% or more of their assets in commercial real estate.
Office buildings.
Office buildings.
Yeah.
Even though industrial real estate's doing fine, doing okay, it's fine, it's stable. The office building situation is bad
Yeah,
because
since COVID.
yeah, since COVID, because everybody's working from home now, and so those offices are empty.
No one's leasing
So
them.
the commercial banks are they're not selling these office buildings because if they sell them, then their books will show the real value of them, which
Yeah.
is way lower than what they bought them for. So they just hold them. And so we think if they end up having to sell some of these assets, they're gonna crash
Because
just
yeah, they
by
have to
doing that.
realize their losses,
Yeah.
and then they're gonna be,
Yeah,
they're not gonna,
they may not survive.
their value will,
some
yeah.
of them, especially smaller banks.
Yeah.
So yeah, so right now we're seeing drastically reduced numbers of people. They're able to participate in real estate transactions, even if they can qualify for a loan. The mortgage payment is so high now because of the interest rates, they can't afford the payment.
Mhm.
Like a regular family home, 1.2, they have a $7,000 a month mortgage payment, sometimes higher depending on what they have, how much of a down payment they have.
Yeah.
It's terrible.
It'd be higher if they finance the whole thing.
Yeah, if they finance the whole thing. So no, people just can't do it. So the interest rate, trying to keep the money high, keeps the interest rates high, and then it crashes all these other markets that are essential to our economy.
Yeah.
Okay.
Okay.
So
Transportation and consumer goods are affected too, because when prices rise, so does the cost of doing business, obviously. When raw materials, fuel, the finished cost more, the finished products will cost more. When the cost to those who transport goods increases, so increases the goods they are transporting. It's simple math. And we saw a thing on trucking that said that even the trucking trailers that used to cost 30,000 for somebody to buy are now like 40 grand. So
Yeah.
they've gone up 25%.
yeah,
Or whatever.
yeah,
So,
almost 30%.
30%.
Yeah. So it's just one thing leads to another. It's all part of the same cycle. It's all connected. So the point of all this is, our money supply is huge, so buying power is very, very low. There's somebody, I listened to an economist who was talking, he said maybe by the end of the year we'll have inflation will be 30% higher than it is even right now.
Yeah. And we know in the grocery store, prices have already gone up 30%.
Yeah.
Like my peanut butter, I buy Laura Scudder's peanut butter and it was 5 something, and now it's almost $8.
Yeah.
For the same jar of peanut butter.
Yeah. Just crazy.
Yeah.
So at first I just saw a little, I recognized just a little bit of inflation, but now it's really
obvious, especially at
Yeah.
the grocery store and the gas pump.
So another thing we said was our currency has no backing, thus no intrinsic value. The banks, once they sell their commercial real estate assets, and realize their losses will fail. And as foreign countries continue to sell off our treasuries in the bond markets,
We are headed for a financial crash. For all these reasons. There are a lot more, but these are like the basic
yeah.
ones. We
There's
couldn't go
there's
into
some
all
other
of it.
political ones, wars, election stuff that we
lot
could
of
go
stuff.
into.
Yeah.
But this is just one thing that's tangible that most people can.
And this is like no joke. This is like for sure. This isn't a maybe they can kick the can down the road anymore.
They've kicked it as far as they can.
They've kicked it. We're done. This is it. This is where the buck stops.
Yeah.
So it could happen this summer. I don't know, but maybe during the election. We're not sure exactly when they're going to pull the plug out.
But what we want you to do is prepare.
Yeah.
So, go ahead, Kat.
So just make sure you have at least 1 month's supply of everything you need. It'd be good to take your cash out of the banks, because once the banks fail, you will not see a dime of it. Banks can legally use your deposits to cover their losses without reimbursing you. And that's what they call bail-ins. And under Obama, they made that legal. So these are bail-ins.
Yeah.
The banks can take your deposits and you'll never get them back. They can just take your money. So
Legally.
legally. So just get your money out, keep enough in there to pay bills.
That's what Kathy and I do.
Yeah, we have in our safe.
We
We buy
both-
gold and silver, just put in our safe too. But
Yeah, a good gold and silver is a good way to store your cash,
yeah,
basically.
because they don't really lose value.
Yeah, they don't lose value, and they'll probably go up a little.
Yeah,
You know,
they have been going
Yeah,
up.
gone up a little. The people that say silver's going to 3,000 and gold to 30,000. I don't know about
I
that.
don't think that's true.
I mean, silver is an industrial necessity. They're not going to let that go.
There's a lot of silver in the ground. They can still mine
I
it.
know, but I just don't see it going way up
No,
because
no, I
it's
don't
so
either.
necessary in an industry.
I don't either.
It would just make cost of things go way up. But anyway, we store our cash in gold and silver. We have some bills in
Yeah,
the safe,
some cash.
but
We don't
it's just a really good idea to get out of paper.
Yeah,
Get out of paper.
get out of gold and silver paper. Get out of the stock market. I mean, the stock market's a big casino anyway.
Yeah.
And once the banks fail, that whole thing's going to come crashing.
Yeah.
Once the Fed fails, the Federal Reserve, it's going to come crashing down, and all that funny money and all of that monopoly money, basically, and everything tied to the stock exchange is going to just.
If you've ever read Trump's book, The Art of the Deal, he talks about how people when he started getting into casino building, they were saying, "Well, why are you doing casinos? Don't you feel that's like a mob territory?" And he said, "The biggest casino in the world is like right down the street from me." And he was talking about Wall Street.
Wall Street. It's true.
And so he goes, "Why wouldn't I
It's a
chill?
Ponzi-
Why wouldn't I
it's a
do it?"
Ponzi.
That was great.
It's all just puts and calls. And
Love that guy.
Futures and whatever. And it's the same thing with futures of gold and silver.
Yeah.
Get out of paper and gold, silver. Have the actual.
If you have an IRA that's in gold and silver, get the physical stuff. Get it out of that paper.
Because that paper is not going to be worth anything.
Yeah.
If this all crashes
Right now. It's
So
just a really good idea to do this stuff right now.
Yeah.
Okay, go ahead. So at least have a month's supply of food, water, and fuel on hand. And it might be good to buy some extra paper products as well.
Yeah.
Toilet paper. We remember during COVID, sitting at 3 a.m, sitting outside of Costco waiting
Just to be able to get toilet paper. Yeah. One thing we use is one thing we've done is just got a lot of beans and rice, dried beans and rice, because that can go forever. It's very cheap, and we got enough to pass out to all the neighbors in case, because a lot of people don't know this is about ready to happen because nobody's telling them it is.
Yeah.
They're all saying,
Jamie Dimon,
it's fine, cooler heads will prevail, blah, 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 but it's not fine. And we just told you why.
Yeah.
Yeah, this is no more kicking the can down the road. We're there.
So there was this prophet, John Paul Jackson, he's dead now. I knew him through friends, and he was a good guy. He wasn't one of these shill prophets or these deep state prophets. He was a real deal.
Mm-hmm.
He was talking about 12 years ago, he did this thing called the you might want to watch it. It was pretty good. It was called what was that called?
I don't know.
I don't remember. Anyway, he did this whole thing on what was coming in the future, what the Lord is showing him. And one thing he said is there's going to be 3 or 4 periods of lockdowns because of martial law.
Mm-hmm.
And he said during the time, he said it's only going to be a month, maybe 2 months. He said it'd be good just to have a month's supply of everything for these periods.
Yeah.
So we've already had one with COVID. I think one's coming because of the whatever they're trying to do with this false flag Russia war thing, nuclear thing. I think there's going to be another one probably, or maybe before the election, because the election, I don't know. But he said there were going to be 2 or 3.
And one thing I would do want to say is really important too is have water on hand.
Yeah.
Have bottled water. We have like 4 tubs of water filled up. So you can bathe, so you can cook with it.
Feed the garden.
Flush the toilet if you need to, if the power goes out. One thing we also have too are composting toilets. And like Chrissy said,
it's not really a compost. I wanted to buy a composting toilet, but Kathy wanted to do it manually. So you tell them how you did it.
We got 5-gallon buckets from Home Depot. Those orange ones from Home Depot, and you get sawdust and bedding, like hamster bedding, and you put that in there, and that can be your composting toilet. So we have 2 buckets for however long. Yeah. But I mean, you can go, like Home Depot will give you their sawdust for free because they dump out that every night. They dump their sawdust out every night.
You can buy a composting toilet too. You can buy one on a camping toilet on Temu for like $25.
Which I just did it on the cheap.
Yeah.
I got 2 like $5 buckets.
She does it on the
and
cheap.
free. Yeah, it was free. So
yeah, Kathy likes cheap.
I like cheap.
So anyway,
yeah.
Okay. Oh, we also got a solar shower too. That's good because you can fill it up and At
And
least
take-
wash your hair.
Yeah.
You know? Once a month or once every week or whatever.
So one other thing, so just buy gold and silver, at least some, because they can be used as legal tender if there's a period where we can't use paper money. Like if the paper money tanks, like it did in Germany during the Weimar Republic when they were using a wheelbarrow to get a loaf of bread full of cash. You know, gold and silver can be used as legal tender, and that's constitutional. That's
Yeah.
from our constitution. So we can't, so that will, you would be able to use
Just
that.
buying some gold and silver is just a really good idea in
Yeah,
general.
yeah. Just is what you can. Silver is like $30 an ounce. It's super cheap. Gold's a little more pricey
Yeah.
right now to 2,500 or something an ounce, but
Yeah,
you can buy silver,
yeah.
you know.
We have
So
another slide. Nope, we're done.
okay.
So that's it. So for family and friends and anybody who's watching, we just are saying right now it is June 17th,
Mhm.
2024. Take heed and know that it's just time to look and have your eyes open and prepare a little bit. And
Yeah, and it won't cost too much to prepare,
no,
you
and
know.
don't be afraid. God's in control of this, and
Yeah.
there are people, really smart people, that use D-Wave computers that have figured out how to
Get us through the
they've gone
crash.
through the probabilities and they figured out how to get us through the crash. So just know that it's just going to be a period of adjustment,
Yeah.
and you have to be prepared for the period of
Yeah,
adjustment.
might be a little pain, but it's not forever. Don't anybody go commit suicide or think this is forever.
And it's not the end times.
It's not the end times, people. We're not. It's at the end times will be here eventually, but this ain't it. So you know, it's just
It's the end. It's the end of some time, but it's good that it's the end of a certain time.
certain reign
Yeah.
of certain bad people.
Yeah.
Yeah. So Lord, we thank you that you're going to show everybody how to prepare, what they can do with what they have and where they're at. Lord, I thank you that you are able to speak to men's hearts and show, give them peace about everything that's about ready to come down. And we just lay everybody into your hands. We cover them in the blood of Jesus. We thank you, Lord Jesus, that you reign on the throne, that this is your time of judgment on the bad guys, and that we're going to see their system going down, which that's what this financial system is, their system.
Their system.
And we think
Babylonian money magic.
Babylonian money magic system's going down, and it has to go down so the good system can replace it. So that's what's happening right now. It's really a good thing, but it's going to be painful for a minute. So
Right. So we bless you, and thanks for stopping by and being with us, and we will see you next time. God
Amen.
bless.
All right. Bye-bye.